Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, March the 1st, the year's 2020. Let's talk trading. What we're going to do this month is we're going to see this new method. I named it the Walmal method. Basically, uh, the trader, it's like the first syllable of his first and last name, or the first, yeah. So it's the Walmal method. Now, day zero, um, we're not actually going to do any trading today. We're going to go over the method. And the reason we're not doing any trading is because that you are only allowed to trade this method during certain times. Now, of course, fellow traders, remember, these videos are for educational purposes only, and your results may vastly differ from mine, and that trading is risky and you can lose all of your money in the blink of an eye. So, if you're seeking trading advice, financial advice, investment advice, seek it from an accredited financial professional. That way, if you take their advice and you lose your money, you know you took the advice of an accredited financial professional rather than the advice of some guy with a funny name who posts YouTube videos or something you read off the internet somewhere. Okay, so the Walmart method. What is it? Well, you know what? One thing about it is, even though it's a new method, we're going to have to use our money and risk management because we don't want to lose any more on any one particular trade than we're willing to lose. So switching methods doesn't switch our risk management at all. Okay, what is the method? We're going to bring up his trading plan. He calls it rules of the road. So first, start of the day, you have to check the rules, okay? And he says, preserve capital at all expense. So he wants to get at his trading desk at a certain time. He opens his MT4 trading platform. And for now, he's just going to trade one pair, the pound dollar. He's going to check to see if there's any major news events scheduled for the day. And he's going to take a look at where prices moved since the previous session. And he's going to take 10 minutes just watching how price is moving. He's going to check the current spread. And he's going to see what the Australian US dollar did because overnight because of the high correlation, meaning if AUD USD goes up, then probably GBP USD goes up. Or if AUD USD goes down, the pound dollar goes down. So, he just wants to check that out. And he wants to see if there's any gaps in price. Because if there are, there's a slight market bias in that direction. He wants to look at the pivot point, and there's a market bias in that direction. And the weekly pivot point, if it's not crossed, slight market bias in that direction. So I would assume that the if not cross is also applies to the daily, but I'm sure that Walmal will get back to me, and he might even post a comment in the video on YouTube to let everybody know. So what? So you want to see what price did the day before? Will there be a correction? And how about the week? Correction. And he has a daily notes journal. Okay, and he says check his emotional state. Okay, so is he upset? Is he happy? You know, what emotion? And then the physical condition. Is he bright-eyed, bushy-tailed, ready to go? Or is he dragging? You know, it is the afternoon, possibly his time. He's on the East Coast. And then he's saying that these things are just observations because he cannot influence the market. He can only trade what he sees, and he can only manage his risk. And if he manages his risk, he will succeed. Okay. So he's really wanting to be concentrating. So no web browsers except to the Forest Factory news page. And now he only wants to trade the following hours GMT time from 8 through 15. And he's saying that 8, 9, and 13 seem to be the best times. Okay, look at the whole chart. Look at the left and see if there's any obvious places where price struggled or was rejected. And consider the previous H1, high, low, and midpoint. And only line breaks, either long or short, the 10 through 90. And I think he left off the double O here in his document, and the 25 and 75. So we've got the psychological points. Or maybe he left off the double O intentionally. Maybe he doesn't want to trade that. Only trade in the direction of the hourly candle. So if it's green or bullish, you go long. If it's red or bearish, you go short. Or white or black, whatever colors you're using. And you want to look for a retest of a line break unless momentum carries through swiftly. I think he spelled through wrong there. And consider the H1 and M15 candle size over the last 1,000 bars. So you can see here candle size greater than 7, 69% of the time, greater than 10, 51, greater than 15, only 20%. So the candle size on H1 greater than 10, 87% of the time, greater than 15, 65, greater than 20, 46, greater than 25, 31. So you can see here, you want to, if it goes over 15, chances are it doesn't look like it's going to go over 20. Okay. And then the body size, that's the top of the candle to the bottom of the candle, or from the distance between open and close. You can see M15 greater than 3, 54%, M15 greater than 5, 35%. That's just, once again, open to close. High on the H1 candle, body size greater than 5, 53% of the time, and H7 or H1 hourly candle greater than 7, 40% of the time. And he's going to use a stop loss of 10 pips, so that means his position size will be constant. Okay, now this is where it really gets into the meat of it. And you can see he's really thinking about his risk management and his money management. Stop loss is 10 pips from your entry. So say you're entering at 80, your stop loss will be at 70. He says, watch the price action like a hawk. If it goes +3, then exit out if the price turns against you. Okay? Exit with the loss if the candle color flips and it's 5 or more pips from your entry point. So say you entered and it goes up 4 and then it comes back down, the candle colors flips at your entry -1. Let's just say you got right in at the open. Then if it goes to entry -1, you're out. And if price goes against you more than 7 pips from the entry point. So in other words, if you enter and it goes more than 7, he says just take the loss, even if it hasn't hit that 10. So if price just turns against, exit out with a small loss and wait for the next opportunity. There will be another train that comes into the station. Don't just jump back in, wait for opportunity. Okay, now if the price goes up 5 pips, this is a money management side, move stop loss to +1 and let it ride. Okay, he says it's essentially a free trade, which will cover the cost of commission. Okay, if price stumbles or stagnates, consider exit point. Okay, so where is it compared to the previous H1 midpoint? Consider the H1 and M15 candle size, and consider any problems area to the left of the chart. Your first target is 10 pips, and that is between 50% and 33% of the typical candle movement for these hours. That's why it is important to reset at beginning of hour. Remember, these are means or averages. Price is going to do what price is going to do. Okay, so now we look at what he has. So he was using the frequency distribution display from 2019. Okay, and you can see first he looked at 100 bars, high minus the low. Basically, this is the range, okay? And this is unfiltered. And you can see right here, greater than 7 pips, 94% of the time, greater than 15, 59%, but greater than 20, only 39%. Now here, he's filtering the 9 o'clock bar. Okay, so I'm assuming he's probably done this for just about every hour he wants to trade. But you can see here, greater than 15, 80%, greater than 20, 50%. But you see over here, for no filtering, it's only 39%. So by filtering out the best each hour, he can see when it's best time to trade. And over here, he's doing the candle top minus bottom, or open minus the low. I'm sorry, close minus the open, or open minus the close, but it'll be a positive number here. That's why we use top bottom. And you can see here these sizes of the body right here, greater than 10, 57, but greater than 15, only 33. So we can now look at his trading chart. And so what's he have? He's got the dots. I believe he's using TRO mid dots. Yes, he is. And you can see he's got the previous mid set to true. And so he has the dots. So right here, you see we're getting ready to go to a 20. But if you look at this candle size, which maybe we should put a range up, the range indicator over here, and you can see what that candle size is. And it would see probably your trade would have been here at 30. So if you would have taken that trade at 30, you'd be up already. So, there you have it. So if you look here, but remember, you wouldn't have taken this trade because it's only 6 o'clock. It's the 6 bar, not the 8 o'clock bar. This is the 6 o'clock bar. So we would be early, but just looking here, you can see how this would have worked out. So just taking the trade right here at the candle color, there would have been pips. And here, if you took the trade right there across the 10 line, and maybe you might have taken it, let's see, if you got in a trade, we'll start here. You take it the trade at the 80, even though I know one thing today, the spreads were crazy, so you probably wouldn't have traded the first couple of hours. But maybe here you would have traded, you might have gotten out at +1. Here, once again, maybe a +1 trade here. You could have taken 5 pips. Here, looks like maybe, what's the high? Yeah, you could have taken 5 pips out here, and then here, you could have taken up to maybe 10 pips. So you can see that this trader, I guess he's been watching my videos about horizontal lines for a while, and obviously he's come up with a system that is very profitable for him. And remember, these videos are for educational purposes only, boys and girls. So your results just may differ. And what I did was, he has the dots, but I made my own little template here. And I like to have the lines, even though they're kind of hard to see in a way. And what I might do is, I might go down to the M15 chart and use the candle and have the background candles as red and green. But I think this method might help a few people out there, a few traders, and let me know what you think about it so far. So we'll come back tomorrow, and I think maybe we might be able to actually see a trade or two happen. So fellow traders, just remember, as you're trading this week, it's not what you trade, it's how you trade it. So let's get out there and drain the banks. the Walmal way.